Okay, good day everyone. So, for those asking me to give more explanation on how to spot break of structure and also how to spot market structure shift. So, from my previous video, I told you guys that once you see price breaking below a previous low, or you see price breaking above a previous high, that's a break of structure. So, if you see price moving in this direction, breaking below every previous low in a downtrend, this is a break of structure to the downside. And also, this is a break of structure. And remember, the break of structure must break below every, for a downtrend, it must break below every previous low with a full candlestick. It must not break below with a weak candle. If it break below with a weak candle, that's an invalid break of structure. But once we see price break below or break above with a full body candle, that's a valid break of structure. So this is also a valid break of structure. It's a valid break of structure for an uptrend. And there are break of structures on multiple time frame. There are break of structures on one day, daily time frame, 4 hour time frame, 1 hour time frame, just like that. So if you want, on the normal day, if you want to do your analysis, you can start from the higher time frame, looking at the direction of price. So you can start from the higher time frame, looking at the direction of price. I like doing my analysis from, let's say, 4 hour time frame down to the lower time frame. So from 4 hour time frame, you can clearly see price is in an uptrend. Price is moving in a bullish direction. So I see price is in a bullish direction, creating multiple break of structures on the daily time frame. So now, what next? What next? You have to move to the lower time frame. Go to the 1 hour time frame. On the 1 hour time frame, you can still see same thing. Price has been moving in a bullish direction. So all these things price has been doing, like me, I don't usually like focusing on all this previous movement price has done. I mainly focus on what price is currently doing. So I can just start doing my analysis from this point here where I see multiple break of structure. I can just start doing my analysis from there. I don't have to go back to previous trades that has occurred like a month before or 2 months before or 3 weeks before. I don't do that. I mainly focus on what price is currently doing. Either I mostly check what price has done either last week, last 2 weeks, or what price is currently doing within that week. But I observe that using the higher time frame. Then from there, I after spotting my buyers, I move down to the lower time frame to look for my setups. So now, from here now, you see price has been creating multiple highs just like that. You can see it's in a bullish direction. Price is in a bullish direction, creating multiple break of structures just like that. So now, since you know price is in an uptrend, what next? You have to look for um you have to look for key levels or key areas where price will probably retest on. Then you use that to take your entries. Then you also look for signs of reversal, meaning price can just decide to come now to take out this whole sell side liquidity. So let me talk about liquidity first. Each time price moves in this direction, let's say price is in a particular trend. Let's say this is a particular trend now. This is a particular trend. Also, let's say price is moving following this trend. For example, each time price go up, it must come down, retest on the trend line, go up again, must come down, retest on the trend line, go up again, it must come down again to retest on the trend line. And you just see price creating all this movement just like that. You can say the price is in an uptrend. You see each time price retest on the trend line, go back again, retest on the trend line, go back again. So at every previous low, each time price drops down, at every previous low, there's always liquidity residing there. So at every previous low, you must always see a liquidity. That's why most times it is not advisable to use a trend line when trading. If you don't understand liquidity, it's not advisable to use just trend line as your basic confirmation. So you see at every previous low, there's always liquidity at every previous low. So see, at every previous low, there's always liquidity, and price can decide to come down for this liquidity. Price always go for liquidity. Each time price moves, it's always aim for liquidity. And also, one thing you should know is that at every previous low, at this low, there are stop loss. Like a lot of traders, they always put their stop loss at every previous low. There are people stop loss at that previous low. Also, people stop loss at this previous low, and also people's stop loss at this previous low. And price will always go for those stop loss in order to take them out. Meaning, those stop loss are what you call the liquidity, and price will always go for them. So now you see price come down all of a sudden. You will see multiple sell candlesticks. That's why you see most times you just see like a big red candlestick will just come down in a straight manner like this, or you see multiple red candlesticks coming down in this direction. This now is the liquidity sweep, meaning price has cleared this whole sell side liquidity. That's a liquidity sweep. So now, after the liquidity sweep, what next? You see price now move in this direction. You first see a candle. First of all, see a candle just like this. You see a pullback first. Then you see price or move to the downside. Now, this movement back to the downside, this is the break of structure. You must always say this fake break of structure. You must always wait for that fake break of structure. After this break of structure, you see price now push again to the upside, creating a market structure shift at this point. See price create a market structure shift at this point. And on this previous high, there will be a breaker block here. There will be a breaker block here on this previous high. You see price now use the breaker block. First of all, use the breaker block, then push to the upside, continuing that particular trend, taking out this previous high as a liquidity, because people's stop loss will also be at that previous high. So now to take out this as the next liquidity. So this is how you can always use the this kind of pattern for your trade. See, after price moving in a particular trend, you see price now come down to take out liquidity. That's a liquidity sweep. Then you see the fake break of structure, the market structure shift, the retest on the breaker block, or you can also see a retest on an order block. Then you see price continuing that particular trend. So this is how liquidity is. Like you see now price is moving in this particular trend. Now at every previous low here, there's liquidity here, there's liquidity here, there's liquidity here. Each time price come back to retest, there's always liquidity. So there's liquidity here, there's liquidity here, liquidity here, liquidity here, just like that. So there's also liquidity here. All these points, they are liquidity. It's every previous low. There's always liquidity. It's always liquidity at every previous low. So this is how you can um always be at alert each time price is going for a trend line liquidity sweep or um a continuation. So let me show you some examples on the chart if I can find one. So let me show you some quick examples on the chart. Examples of a liquidity sweep. Let me see if I can find some examples on the chart. Okay, you can see now from this point here. Let me move down to, let me spot that out first. Let me go down to lower time frame, 5-minute time frame. I think price can't go beyond this point. So let me look for another area again. So I guess I can't go back on the 5-minute time frame. So I just have to use this. Just have to use it like that. So now you see this movement now. This price moving in a particular trend, and you see the pullback each time price goes crazy pullback. So we see pullback to the downside. So now you see this multiple sell candlestick came down again. That's a liquidity sweep, meaning at this previous low, every previous low here, this low, there's liquidity, there's liquidity, there's liquidity here. So you see this multiple sell candlestick came down to clear out the sell side liquidity. So when taking your trades, always be at alert. Always watch out for liquidity sweep, because after a liquidity sweep, is either price will continue, do a continuation on the direction of the sweep, or most times it will reverse to continue that particular trend. Especially if price, you see price moving in a particular trend, if you see price do a liquidity sweep, it must continue on that previous trend. But if you see price let's say price is moving in, let's say price moving in a range, price in a range direction, and you see price clear out liquidity, see price moving in a range in this direction, see price moving in a range like this. So you see price moving in a range like this. So at this high, there's always liquidity at this high. And at this low, there's always liquidity. Yeah. So once you see price moving in a range like this, what you should watch out for is a breakout. So always watch out for a breakout, because price can decide now to take out this whole sell side liquidity, take out this sell side liquidity as a manipulation. After the accumulation, you see price now clear out the sell side liquidity as a form of manipulation. then you see price now reverse back. That's meaning, for people using trend line to trade, what they will be expecting from this kind of pattern is that once they see price consolidating, they will draw a line at the top. They draw a line at the top, and also they will draw a line at the bottom. And what they will be expecting is for price to retest from here. We're expecting price to break out. Once they wait for a breakout, but they wait for a breakout, then expect price to retest, then push to the downside. But this is totally wrong, especially when you don't understand liquidity. So this kind of pattern is totally wrong, especially when you don't understand liquidity. Once you see liquidity at this point, you see liquidity at this point, you see liquidity at this point, and also you see liquidity here, you see liquidity here, and you see liquidity at that previous high. What you should wait at, what you should watch out for is for price to either take out the sell side liquidity or the buy side liquidity. And how would you know price, the way price how will you know the kind of movement price does when each time it's going to take out liquidity? You see a slight or a curved movement. You see price moving a curved way down to that side. That means price has automatically taken out this sell side liquidity. And what next? You see a sudden pullback, creating a market structure shift. Then you see price retest again, moving to the upside. So for this uh, pattern now, expect price now. Sorry, let me take this out so it's going to be clear for you to see. Okay, for this pattern now, you see after the um pullback, after price has cleared out the sell side liquidity, you see the reversal. Then now you see price retest from here. And from this point of retest, you must always watch out. There must always be an order block or a breaker block. It must always be either a breaker block at this area or an order block at this point, or you can also see a breaker block at that high. So you must always watch out for that pullback. So price might either retest on the breaker from this point or the breaker from this point, or come down for the order block at this point. So let's say price is retesting on this breaker block now. After the retest down, you see price moving to the upside, taking out buy side liquidity. So see, from this kind of pattern, this will clearly let you know that price always go for people's stop loss, because now those are waiting for a those traders waiting for a retest from this point now. Those traders waiting for a retest from this point. Once they see price now moving to this direction now, what will they do next? Now they will have to do say, okay, I want to take my entry from here. Now. Then my stop loss now will be at this previous high. Then my take profit. Just let me say 1:3 risk to reward ratio. Then you see price now pushing to the upside, taking out their stop loss. So you see price will move to the upside, taking out their stop loss because of this false breakout here. So let me show you some examples on the chart. Let me show you some examples on the chart on that. And one thing you should also know is that price can also consolidate in this manner. Price can also consolidate in this manner. After the breakout, you just see price do a continuation. creating, that is, you see price do a continuation, creating multiple um break of structures to the downside. So you can just see price do a continuation like this, just do multiple continuation just like that to the downside. This first thing price can do, and also price can also do this after the first breakout from this point here. Price can also reverse back, retest, then keep going higher. So this is the two things price can do. So let me do that on the screen for those that want to get screenshot on that. Don't forget to subscribe to my channel so you can get updates on my videos. And make sure you turn on the notification bell. So after the breakouts, yeah, price can do that fake breakout, then continuation to the upside. Then also, if it does a breakout to the upside, this price do a breakout to the upside. Now you can also see a continuation depending on the way price sweeps the liquidity. If the liquidity sweep to this upside is not in a curved way, just know price is going to continue on that direction. Price is going to continue on that direction. But once you see the liquidity sweep is in a curved, like a price move in a curve, the candlesticks move in a curved way, know that's a fake breakout, and price gonna reverse, retest, then continue to the opposite direction. So for this also, for a sell, see price consolidating. So you can only use this chart patterns if you understand liquidity. If you don't understand liquidity, you will always get stopped out. That's why you see most times use this chart pattern and you'll be like, these chart patterns aren't working, they're always going against my trade. That's because you don't understand liquidity. So you see that's the first breakout, and you see price now move to the opposite direction, test, and dump, just like that. So if you see the candles move in a curved way to the upside, that's a fake breakout, the first breakout, and there's a high chance for price to reverse and move to the opposite direction. So let me find that on the chart now. Okay, you see the normal stuff, see price consolidating from these points. So this point, then you see the breakouts, the retest, then you see price coming down to take out liquidity. So if you observe now, this breakout price did here is just in a straight straight line. But how is it move in a curved way? There's a high chance for it to reverse back, retest, then continue to go higher. So now let me look for the other types of fake breakouts on the chart. Look for other fake breakouts on the charts. So just 1 second. I think I saw that somewhere. Let me go to a higher time frame if I can see that. Okay, we mark this out. We move down to the lower time frame. Oops, price can't go beyond that. Okay, look for another one here. And you see, the way you can always get the accumulation, the manipulation, and the distribution strategy pattern is mostly during the like, when the market close at midnight, then meeting market opens, that's the beginning of the Asian session. So, and there's less volatility during the Asian session, so price will just probably consolidate during the Asian session. Then once, let's say, the beginning of London, or before the opening of London, you must see that manipulation, which is the first breakout. Then at the beginning of New York session, you see the manipulation, then the distribution. So you can also use that pattern. So I can't find it on the chart. Yeah, I've been looking for it on the chart. Let me go down to the 5-minute time frame. Sorry for the delay. Okay, this is 1 year. This point here, you can see the consolidation. That point, see the consolidation here. See, price has been consolidating. Then you see the manipulation of price, and remember what I said, it must move in a curve. Once you see the curve movement with multiple candles, remember, if it's a sell candle, there must just be multiple red candles without any green candles. If it's for a buy candlestick, there must be multiple green candlesticks without any red candlesticks in this kind of curved manner. So after the manipulation, what things see price now push to the upside, retest, then continue that particular trend, taking out buy side liquidity. So you can also use this pattern for your trades too. So let's move down to the other part of today's teaching. So from last week, remember what I told you, after the break of structure, price has been creating on good. You see each time price creates a break or structure, it's always go back to retest on the breaker block. Anytime it creates a break or structure, it's always go back to retest on the breaker block. So now this is the last break or structure. Price did on good. That's the last break or structure price did on good. And price was supposed to retest back on the breaker block, then push to the downside. But pricing didn't retest on the breaker block yet. So you see, I just drew the breaker block. I identified that as the BB, and you see, MACD price came tap into the breaker block. It started moving to the downside, and now if you should go down to the lower time frame, the 15-minute time frame, you can see after price starting, it has also been creating multiple break of structure to the downside. See, price has been creating multiple break of structure to the downside. So you always try to use multiple time frames to take your entries. See, price now has been moving to the downside, and see, after the break of structure, you can clearly see this order block here. The price started reacting from. So I think this order block is unmitigated yet. So see, price has been creating multiple break of structure. They always use multiple time frames to check for more entries. Okay, yes, I think there's an OB here at this point. So I'm expecting price to come back to take out this previous low as the next break of structure. So I'm expecting price to come down to take out that previous low as the next break of structure, in order for it to come down to trigger our buy limits at this point here. I'm going to trigger our buy limit at this line here. So remember, on every time frame is a break of structure. So the way you mark your break of structure will also determine the kind of setups you always get. If you mark your break of structures on the daily time frame, or the 4-hour time frame, or the 1-hour time frame, your setups will probably be on that time frame, and most times you cannot spot your entry on those time frames. So what you do next, you move to the lower time frame so you can spot your point of interest. So now, if for a break of structure to be valid, price must break above every previous high with a full body. You see this candle now, it closed below this previous high with a full body candle and not a weak candlestick. So for a break of structure to be valid, it must break above with a full body candlestick and not a weak candlestick. You see now, price move from here. See now, price move from here, came down to this point. Now it broke above again. Broke above here with a full body candle. So this is on the 1-hour time frame. This is how you mark your break of structure on the 1-hour time frame. Always look for points. First of all, you mark where price reacted from an order block. Once you mark where price reacted from an order block, what next? You find the area where price created a first break of structure. After the first break of structure, you look for other place price will come back to retest on, then before pushing to the upside again. So even if I'm to take entries from what price is currently doing today, if I'm to take entries on what price is currently doing on today, so this is an easy way for you to mark break of structure. Now you know price is reacting from a point of interest. Price is currently reacting from that area. So what next? Once the price reacting from there, what next? You now move down to lower time frame, looking for areas where you can take setups. Now you see this is the first, after price started from there, this is the first order block price created here. So now you draw that back, indicating that as your OB. That's the first order block price created. Then next, what next? You see this pullback. You see this pullback now. That you can call this as your inducement, because it hasn't mitigated the order block well. So you can call that as your inducement, meaning your liquidity. After the break of structure, or let's say let me move down to lower time frame. I'm going to 3 minutes. And after the market structure shift, you can clearly see this is the this is the last break of structure. And after every market structure shift, there must always be an order block, and the first pullback, once the first pullback didn't mitigate the order block, that's your inducement. So now you can see after the market structure shift, see the first pullback here. Let's see here, it didn't tap into the order block. When you go down to higher time frame, see, it didn't mitigate the order block there. So that's the inducement. You can call this your inducement. So now you see price now creates another break of structure here with this pullback. Next break of structure price created with this pullback, and from this point now you see price now going back for that OB, for this OB. And remember, for an OB to be valid, it must be protected by either a liquidity, a fair value gap, or there must be a liquidity grab. So now you can see the rejection here. That rejection candlestick is also a liquidity grab. You can see the inducement, which is the liquidity protecting the order block. So that's two confirmations to let you know that the order block is valid and there's a high chance for it to play out. So from this now, if we are to take entries from here, you expect price to come down to take out previous low, creating another break of structure. So for this kind of entries, you have to put your entry at the beginning of the order block, your stop loss just a few pips above, then your take profit, you should be aiming for either this previous low, and you can extend it a little lower. So you expect price to mitigate the order block, then move to the downside again, creating a final break of structure just like that. So this is how you can always take your entries using this kind of setups. So, and also make sure you like my videos, subscribe, so you can get updates on the next one I'll be uploading soon. And also my Instagram and my TikTok link is on my bio, so you can also follow me on IG and TikTok, so as to get more info on the next videos I will be dropping. Thank you.